So tell us what the latest is now from Greece and where that country stands in terms of what it's going to do about upcoming debt payments.
You know, every time you think that the story gets a little bit better, you have to have me back on to tell you it's not getting any better.
Charles, you're always welcome here on the Hub.
You're very kind. The problem in Greece is that the parties are essentially unable to form a coalition government that can carry on and implement the terms of the bailout that the Eurozone has demanded. It is pure political chaos. No party has a clear majority, and it's difficult, even if you do the math, to try to come up with a group of parties that could form a majority. Even crossing the political spectrum. So Greece
Charles,
remains.
as you're speaking, we're just putting up on the screen here how some of the European markets have done today. Nothing. France has taken a bigger hit than everyone else, but overall, Europe seems to sort of be dealing with this so far.
It's an interesting question, the extent to which Europe has insulated itself from Greece, and I think what we're seeing is, in the reaction of the equity markets, the not terribly severe reaction in the equity markets and in the bond markets suggests that most of the risk of further turmoil in Greece is not really relevant to the private sectors, at least, of many of the other European economies. And that's
Charles,
actually a fairly surprising development.
Do you think that makes sense for investors to be thinking of that, or is that a big mistake?
That having been said, let's look also at the euro, the euro has been remarkably stable during the course of the last several months. There's been all sorts of turmoil in Italy and Spain, which are far bigger and far more important countries than Greece, and the euro has sort of chugged along at about 131 to the dollar for a long time. The euro did take a hit yesterday and today. It's not a huge hit, but it is down, and that does suggest that what investors are looking at with Greece is the risk of some, catastrophic breakup, Greece coming apart from the Eurozone. That has increased, and that is negative for the euro. It's still a relatively small likelihood in the near term, but that's negative for the euro. But by and large, that concern hasn't spilled over into other markets.
Right. All right, Charles, hold on one second there. Let's bring in Matt Karnichnig from Germany, the Wall Street Journal's German bureau chief. Matt, where does this leave the European Central Bank, as Charles was just talking about there, the fears weighing on the euro and pulling back from Greece, but to the wider political stage, especially in terms of France, if there's going to be an anti-austerity push, or if people like Greece start saying, hey, we want to renegotiate compacts, what does the ECB do?
Well, I think in the short term, the ECB doesn't do anything. They see how this plays out. They've already taken a lot of extraordinary measures here, providing almost unlimited liquidity into the market. And I think that they want the governments of Europe, Germany and France in particular, to resolve these issues. They don't feel that it should be their role to continue to intervene here.
Right. Is that realistic, though? I mean, that's what the ECB would like. But if you have any fracturing of the relationship or the strategy between France and Germany, sort of the ECB is the last man standing in a way.
Really, and the only
That's
source of
right,
liquidity.
but I also wouldn't expect them to act until things get to the brink again. If you look at the pattern over the past few years of when they've actually intervened, it's only been when they've been standing on the abyss, basically.
And Matt, is that a tactic on the part of the ECB? Are they going to kind of play a game of chicken with other European governments or with European governments and say, hey, we're gonna hold our water until you guys step up to the plate?
Yes, it is, and I think in some cases it's worked. They've gotten some concessions over the past few years with the bailout fund and other things that they've wanted from the governments. They would like to see more sort of fiscal cooperation. They would probably welcome, or would definitely welcome, Euro bonds, most people on the ECB, and similar measures like that. They don't think it's the role of the central bank to play the rescue fund here, and in that, they're supported by their charter. They're supported by the Bundesbank, which is obviously the most powerful member of the ECB.
All right, Matt, thank you. Charles, one last question to you. In the next 2 or 3 weeks, it seems that Greece has a number of debt payments coming due. Is there a real and present danger of default at the moment?
Well, Greece has a couple of debt payments coming due. One is, ironically, to the ECB itself. Greece when it did its private sector involvement debt swap, which imposed losses on private creditors. It carved the ECB out, and the ECB holds some Greek bonds. There are a few billion of them that will mature toward later this month, that Greece will have to decide, will have to pay. And then there's a foreign law bond, a relatively small bond that matures also later, I believe next week. That's going to be a much easier bond to default on. If Greece is in such chaos that it can't make the payment to the ECB, that would be severe difficulty inside the Eurozone. So I suspect that the governments will provide the money to Greece to make sure that Greece is able to make that payment at least. The foreign one is another question.